was a big news this week for the US dollar. We just got CPI data, just dropped this Thursday. You guys won't see this till Friday, and we are also going to get some retail sales data. I'm going to give you guys my thoughts here at Capital Markets. Traders, welcome back, guys, to Capital Markets. It's your host, Cleveland Bishop. Hope you guys have had an awesome trading week. There's been a lot of volatility, okay, and I want to discuss all the different fundamental data releases that have been coming out here on the channel. So make sure you guys stay subscribed because we're going to do a lot of follow-up next week as well, all right? If you guys ever have any questions, please comment down below. I'm really excited to answer away, okay? And the top comment, I will repost that comment in the next video, okay? So guys, look, we saw a lot of movement over on the euro side, all right, over for the euro, because we did see that the euro was likely to stop the quantitative easing that was happening all throughout 2014, 2015, up until 2018. They want to stop that process in the last month of 2018. That might give us a little boost, okay? So I was actually keeping an eye on the Euro NZD because earlier this week I was talking to you guys about Australia and New Zealand, and I thought we would see a little bit of euro strength, and I thought we would continue to see New Zealand and Aussie weakness. But what's crazy, take a look at this article here that just came out regarding the US and China potentially going back into trade negotiations. That saw a massive move in terms of a buy-side move in the New Zealand currency and in the Australian currency. A lot of market participants were looking at that data release as, holy cow, this might be positive. Okay, so that's the exact opposite of what anybody that has been wanting to sell off the New Zealand and the Aussie dollar for the past few months. That's the exact opposite news that they wanted to see. But interestingly enough, here's a quick screenshot of the Euro NZD. You guys can see markets really sold back off onto a pretty major structural point on a 4-hour and popped right back up to the previous high. Didn't quite hit the previous high, but we're right back up in that level. And what I didn't want you guys to do was to start buying into the Aussie dollar and the New Zealand Kiwi because of this one article that really cascaded around all financial market news and publishing companies. Okay, earlier this year, I think it was in even April, China mentioned and Trump mentioned that they're about to crack down on these massive trade wars, only to have a calm for 2 months. Okay, we saw a massive return back in the renminbi, back in the Shanghai stock index when they stopped talking about the trade war implications, and then they came back again, and then we saw markets sell off. So I don't want you to get thrown around by this data release. Again, it's something to keep an eye on, because if these trade talks become something that's more positive for China, well then obviously you're gonna have a rippling effect in Australia and New Zealand. Okay, so let's keep an eye out on those currencies there. Again, I would like to see a break higher on that Euro NZD, but we're just gonna have to wait and see what happens with China. Now, I was also mentioning to you guys earlier this week that we're gonna have a massive amount of US dollar data coming out, and we got it. Okay, so CPI came out on Thursday negative. Okay, so CPI came out negative. Unemployment claims came out a little bit lesser than expected. Okay, so we're starting to see a slowdown potentially in the US economy. I know this is just 1 month, but to have so many negative readings, that's pretty interesting. Tomorrow we do have retail sales, so we're going to see exactly how retail sales stack up. Now remember, retail sales is 66% of the overall GDP for the economy. So again, if that comes out negative as well, it really starts to get you thinking, okay, is this a general slowdown? Like, is this just some type of cyclical slowdown in the markets, or is this just a mishap, a misjudgment by all the different analysts that gave out these forecasts, which still happens as well? We'll have to see the October readings, and if October looks like September, well, then we might be in for a downward spiral for the US dollar. But hey, who knows what's going to happen? We have to keep an eye out on the fundamentals, okay? And then lastly, we saw a pretty massive move over with the CHF actually, okay? The CHF has been gaining a tremendous amount of strength over the past few weeks, and it's still here. It's still coming. All right, here's a quick screenshot of the CHF versus the euro. You guys can see the CHF pouring sell side. All right, where is all this strength coming from? That's something I want to talk to you guys next week about. All right, so guys, make sure you guys subscribe so you guys can know exactly what's going on. And I'm not sure where you guys are trading, but you should probably head over to capital-markets.com. We're one of the top brokers in the entire industry. We have some of the best liquidity providers. Okay, that's going to make sure that all your positions are filled, and we route your trades very quickly. Also, we have some of the tightest spreads. Okay, tight spreads mean that if you're a day trader, or swing trader, even a scalper, you're going to be paying less and less per trade, and that's what you want. Okay, you want to put that capital back into the portfolio, and you'll see that once your portfolio starts to grow instead of just commissions. Okay, so guys, head over to capital-markets.com. I'm Cleveland Bishop. I'll see you guys next week.